afternoon, everybody. Uneducated Economist here. It's another gorgeous day out here on the Columbia River. Just love it. Love this place. Thought I'd talk a little bit about gold and silver today. Mainly gold, talking about how the Federal Reserve and their actions are causing the gold prices to rise. The Federal Reserve, by keeping interest rates at ultra low yields, especially on these treasuries, is causing people to go, forcing people to find alternative safe haven assets. And, for years I've been following gold and silver. And back in like 2000, I guess it was probably around 2009 when I was buying for the first time, when I bought my first pieces of silver. The Federal Reserve was in the midst of like quantitative easing. People were talking about the inflation is going to be running rampant with this huge expansion of the balance sheet. And a lot of people were rushing into the precious metals. And it caused the prices to rise to their highs. Silver had reached up and touched its all-time high of $50, and gold had run up to $1,900 an ounce. That was by like 2011. The people who were buying in on that were just the regular retail investors, like you and me, and not like the big time money. This time around, we have a different situation because the Federal Reserve and their actions of keeping ultra low yields on the treasuries, or just interest rates in general, at least for the Fed funds rate, which is forcing treasury yields to drop as well, has given institutional investors no place to run for a safe haven. See, typically they would go into the safe haven asset of U.S. Treasuries because at least they would get some sort of yield off of it. They would collect a little bit of interest by buying these bonds. But now interest rates are so low that if you were to buy a bond today and hold it for maturity, you are almost guaranteed to have a loss of purchasing power after inflation. And considering that there are so many negative interest-bearing bonds out there, when you think about worldwide, the bond market really is not a safe haven place to be. Now, it's just as much a speculation, like you intend on selling your bonds for a profit to somebody else in the future, very much like you would gold. And now the biggest argument for gold or against gold, if you were one of these guys, is that it doesn't pay a dividend or a yield. Well, neither does the U.S. Treasuries any longer. You are expecting interest rates to continue to drop into the future so you can sell your bond for a profit. That is not a safe haven. That is a speculation. And so now what we're finding is that institutional money is starting to go into the gold and silver market, especially gold. I don't know about so much silver, but definitely into the gold market. And this is the big time money. This isn't like retail investors where you get a handful of people or a group of people going off there and buying into a market that is very small and pretty liquid if you think about it. This is the big time money. This is the institutional money. This is insurance companies, pension funds. These are the people who are going to drive those ultra high gold prices. When these guys start dumping their money into it, you're going to see huge increases in the prices of gold, or the mining stocks as well, because this is the move. This is the position that they're going towards. And the possibility of these guys getting into gold is tremendous. I have an article I'll leave down in the description, and in this article they are saying that the amount of institutional money that has allocated a part of their portfolio towards gold is incredibly small. Even at this point, it's only like 0.6% of all the portfolios out there hold gold as a position for a safe haven asset. So even if they were to take it up to 1%, you're seeing like a doubling in the amount of gold that they would be purchasing. A strong case for gold right now is just about as strong as it has ever been. The only thing that concerns me is that I do not like buying anything when they're at their highs. Gold is at its all-time high. Silver is at a 7-year high, something like that. this is not the time that I like to be purchasing. I'm not like a guy who goes out there and tries to chase the momentum of stuff. I mean, if you were planning on selling, if you're a trader, then yeah, maybe now is the time. But for somebody who is looking for a safe haven, a place to park their money in case of inflation, gold and silver are the places to be. Unfortunately, the prices are just too high. So it concerns me to try and buy right now, thinking that there could be a huge pullback as people are looking to, cash in. Like if you were the type of guy who bought silver when it was up at $30 an ounce, and right now you're looking at, $24, $25 an ounce, getting back a lot of your money might be something that you're interested in doing and not chasing that movement anymore. But I really feel that most of the people who would have sold out, like the weak hands, so to speak, have already done moved out. And I have a feeling that here going into the future, it's going to be nothing but strong hands and big buying power coming into the precious metals market. Yeah, once the institutional money starts getting in, then we're going to start seeing some huge price moves. And, hold on tight, because it's going to be one volatile ride. The price swings are probably going to be huge. All right, I got to go back into work. I'm going to give you guys a shot of the river. And Uneducated Economist, you guys let me know.